Hey everyone, and welcome to Earnings Cheat Sheet for Friday, January 23rd. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, is it a busy week?
Yeah, it is a huge week and to look at a bunch of stocks. We want to take a look at three in particular: Boeing, Tesla, and GE Vernova.
All right, well, let's start with GE Vernova, which is scheduled to announce Q4 earnings on Wednesday, January 28th. Earnings for the energy play are projected to rise 258% to 290 per share, while revenue is expected to fall 4% to $10.17 billion. And here's why we're watching GE Vernova. As always, gas turbine backlog will be the focus, with on site power gearing up to be the name of the game for data centers in 2026. Especially with some of the latest news around Trump capping electricity costs. GEV is going to be the big turbine player in this area. Analysts are also noting that these gas turbine stocks are sold out through 2028. And the company has been steadily raising prices to meet this overwhelming demand. So any commentary on any of this will be of great interest. And Ed, that backlog really will be the story here. Management recently hinted that they could be sold out through 2030 by the end of this year. So, talk to me about GE Vernova because this natural gas has really become this sort of bridge uh, power solution for these data centers coming online.
Yeah, I mean, but the bridge is getting further and further out because you might be able to use natural gas, but if you can't get turbines for several years, that one issue is, I mean, presumably the results will be strong, and GE Vernova does have lumpy earnings. You can just look there as like big upgrades and then a down, year-over-year decline, and then a surge, and there's losses a year earlier, on some of these things. It's lumpy but very strong. But the question is, how much stronger can you get if you've already got orders in through 2028, and probably the price is fixed to some extent, I would imagine, that how much more can they do? I don't know if they could, ramp up production anymore or what have you, or give bullish guidance through 2030. You can see, and we'll talk about it more, but it's like, that would be the only thing. It's like, what can they really do given that everything's sold out for years to come? But yeah, this one seems to have a bright future fundamentally for quite a while.
Right. And if this backlog continues into the early 2030s, Ed, I mean, that basically puts it on the same timeline as some of these nuclear facilities that will be coming online. So, is there any discussion or concern among investors that, hey, maybe just nuclear stocks might just be the way to go?
I mean, I don't know. I mean, this thing seems to go back and forth. I mean, there could be other things. We've seen fuel cells. I mean, anybody that can put things on the table. I mean, natural gas producers, coal producers have done well. Anybody who can provide energy now is doing well. Solar is doing well despite some cutbacks in incentives. So yeah, I mean, but this is, GE Vernova has been a strong performer. So it will be interesting to see the commentary and the reaction to it, uh, given that so much seems to be baked in.
And Ed, we're looking at the daily chart here, and GE Vernova is trading just below a recent pivot point of 677.29. Had this really ugly downside reversal day on December 17th that undercut the buy point and the 21-day line. So I'm not sure if that reset the base there. Uh, but what are you looking at here in terms of the technical action with GE potentially setting up ahead of earnings?
Yeah, so you can see when it hit a new high, that's when it raised guidance again, and there was like, here we go, and so they did get a boost already off of that. But yeah, that nasty reversal, it clearly went through, and so that typically, makes the prior buy point invalid. Now you probably could still have used that. I would probably be using 698.74 as probably an early entry. There's going to be a new base heading into earnings, but after this week, but on the earnings week itself, it'll have a buy point of 731, but I think 698 would be a place where people could go. But that assumes that that I would wait for earnings for sure on that front, because you can see this one has big moves, and sometimes it reverses. This is definitely one to wait on. This one might move up 5% and then reverse lower. And okay, that one day it surged and it kept going, but there have been plenty of other days. I mean, there was time and time again, it kept on making these see swings, and sometimes they're up to the upside, but often to the downside. You think it was going to make a move, and it didn't. It didn't. So just be careful on the initial front. But it's doing okay here. Held the 50-day line, held the 21-day line. So after some rough stuff, it looks like it's tightening up a little bit. All things considered.
Right, and we can switch on over to the weekly here, Ed. And as we talked about, looks like it could be forming here potentially another consolidation area. But as you mentioned, those lumpy earnings, we can see some nice gains here, then a loss, and then a big gain last quarter. Anything else with the fundamentals standing out for you? As big as a winner GE Vernova has been, we see a 40 EPS rating, accumulation distribution rating of a C, composite rating of a 78. So not the greatest scores here that we look at. But what's the thesis here?
Well, I mean, the EPS rating is somewhat based off of like the 3 to 5 year growth rate. I mean, there's short term things involved as well. So, but there was a loss, a big loss in 2022. There was a loss in 2023. So it's only been profitable these last couple of years. And so that's something there. And it's a little lumpy too. I mean, honestly, that isn't helping either with some of that stuff from just 2 quarters ago. But over time, as 2025, 2026, there's really strong growth seen. So that's going to improve. I mean, whether the stock improves is a different matter, but the EPS rating is almost certainly going to improve. The neutral AD rating of C isn't great, but we are seeing the up down volume of 1.2, which is modestly positive. We like to see readings over one. I mean, higher the better, and so this is okay. So it's, but again, this is setting up. It wouldn't shock anybody. I don't think anybody would be shocked if this went on another run, but I wouldn't be shocked if we see some head fakes or an extended period as well. So this is one definitely that investors should be watching, but definitely, but I think we always say this, but this one makes such big moves, reinforces waiting for the earnings reaction.
All right. So we'll, in the meantime, be keeping an eye on this 698 level as a potential early entry or the 731 level as an actionable point there, Ed. Let's go ahead and move on to Boeing, which is scheduled to report Q4 earnings on Tuesday, January 27th. Earnings for the aerospace company are expected to come in at a 43-cent loss versus a loss of 590 a year earlier, and revenue is expected to increase 47.5% to $22.48 billion. And here's why we're watching Boeing. After another tough year marked by production caps and delivery delays for various reasons, Boeing is expected to finally turn a profit. Deliveries are expected to ramp up. So, any comments from management that confirm or further raise goals there are key. We'll also want to see how integration of the just completed Spirit Aerosystems is going. And Ed, that production ramp up really will be a key part of this turnaround story. The FAA had capped Boeing at 38 jets per month. That has been lifted to 42. Investors are keeping their eye on the 47 mark to see if that can be kind of the magic number the company can hit by mid 2026.
Yeah, and it really is about that. Can that finally deliver? They just seem to have, like, obviously all these. I mean, just on and on. Just look at the annual losses. It has gone on forever. I mean, there was the crashes that happened. Then there was COVID. Then there was some other thing. There was Alaska airline flight where the door, where the some of the fuselage comes off. There was concerns on and on and on. So maybe, and there were strikes that hit things. Maybe finally this is going to be the time that we're going to see a turnaround, and it's long awaited. So we'll see, but it's like, is that really going to happen? Is deliveries going to do some things? And yeah, so that's really want to see that turnaround, and people are expecting it, and so obviously if they push back on that, that would be hugely disappointing, because I'm sure the stock has made a lot of movement over the past year and the last couple of months, I think, anticipating, okay, things are starting to really, finally clearing. The runway's clear. We're finally going to go. But so investors are really going to hear about just the positive financials going forward.
Yeah, we talk about the price action maybe in anticipation of this turnaround. Ed, Boeing stock recently hit 2-year highs. It is in a buy zone after a lengthy consolidation, 242.69, the traditional pivot point there. Maybe this nice move here on January 2nd, Ed, where it maybe broke some trend line action here. Ed, could have been an early entry. But again, what do you do with Boeing stock? It's in a buy point, but I guess how much is this priced in already with earnings coming up and investors awaiting commentary?
Yeah, I mean, this is why we always talk about waiting. I feel like it's extended from that January 2nd thing. It also had paused. It's sort of like a pseudo handle. It wasn't a handle. It was not. But I mean, that combination of those things, actually just a little earlier, the actual day, that January 2nd, just a day before that, it sort of paused. So that was a nice thing with the trend line. But at this point, it seems extended. And if it pauses here for a few days, like especially if it pulled back a little bit right around the buy zone, right at the buy point, and then it moves on earnings, I think people could do something then if they want, but they could easily move out of the buy zone, and then it would be sort of like feels be out there. So this one may not have a great opportunity. I mean, there's a lot of great things. There's been some strong volume. Look at the skyscrapers over the last couple of months, last 6 weeks or so. Those some solid gains on volume. So that has been a positive, definitely in recent weeks. And the group is doing pretty well. And I mean, the group has been doing well for a while, and Boeing was sort of a laggard for a while late last year, but it's now a leader. So definitely a lot to like about this name, for sure.
Yeah, and I'm just going to switch over to the weekly just to get a better view. And again, we can see Boeing coming back here, trying to get back to those highs over the last couple of years. But again, fundamentally, Ed, what are we expecting? Because we talked about we had some losses here. It's been posting some pretty impressive earnings and sales growth over the last year. Uh, but I guess is that enough? I guess for investors to buy back into the Boeing story.
Yeah, I mean, the losses are getting smaller, and that's where the growth is from that perspective. And the revenue growth has been strong, and Q1 supposed to be really strong, probably reflecting some ramp up in delivery. So again, there may be a nice story there. It seems like order books are there for full for a while. So again, if they can just deliver, if they can just finally deliver, they should have a good thing. But again, a lot of that's baked in. I mean, it's like everybody can see those order books, and obviously people want to see even better order books and all that. But yeah, so if they can deliver, there's that. I think that 2-year high is important. So again, if it pauses here, that would give another reason why you could buy it, from that high from a couple of years ago, sort of this long base that it's been in. And it has gone up so many weeks. That is the one downside. It's gone up so many weeks. It almost feels like, don't doesn't it deserve a pause here? Like a pullback, and it just feels like that it could easily happen. But it doesn't have to. It could that pause could happen at 300. It could surge. It could surge up and then pause. So, but that's just something for investors to consider. It's gone up week after week after week. So there's the risk that that would need to take a break.
All right. Well, let's go ahead and move on to Tesla, which is scheduled to report on Wednesday, January 28th. The EV maker turned AI play is expected to see Q4 earnings fall 38% to 45 cents per share, and revenue is expected to dip 4% to $24.77 billion. And here's why we're watching Tesla. I mean, there's a lot to watch here. We'll want to see any updates on the robo taxi and any insight on what's going on with removing those safety monitors. We'll also want to know if Tesla is still on target for April production of the Cybercab. Is it going to be available to customers? We'll also be paying attention to the unsupervised full self driving timeline. Is Elon Musk going to give us more of the same or some more concrete timelines? And any insight into the 2026 vehicle sales expectation and Tesla energy growth. And Ed, Elon Musk really seemed to lower expectations ahead of earnings on January 21st. He made some comments on X that warned that the early production for the Cybercab could be agonizingly slow. So, probably not what investors want to hear right as Tesla earnings are around the corner.
Yeah, and there's breaking news on this day that Elon Musk is saying that They have started robotaxi drives in Austin with no safety monitor. Again, I don't know if that means what exactly that means, if there's any things that it doesn't, they're chase cars or anything, but obviously that's an issue. There's some other positive news about like Lemonade. This insurance company is supposedly offering cheaper rates if you have FS, full self-driving, enacted. I don't know how that how that is playing out. But yeah, it's the self-driving. It's the self-driving because that's everything. Because there's no real reason to believe that the vehicle sales will do well if there isn't self-driving, like, or the anticipation. It doesn't have to be. I do care. It could be that if robo-taxis are truly getting to be self-driving without monitors and all that, blah blah blah, then you could, so even if you personally don't have it, you could see the runway toward it. But if you don't do that, then it's going to be hard to see why Tesla, without new vehicles, sales fell last year without the Model Y. So it's self-driving. It's self-driving. But it's also not clear what he'll say on that earnings call because there's this news today. There's been news. There's like the changing deadlines. He sort of pushed back on self-driving, from a few weeks ago. He sort of pushed back on some other things. He made some other comments this week, like at Davos. So it's not clear what will be on the earnings call. Maybe actually a boring earnings call. I mean, I don't know. I mean, it probably won't be, but it could be because there's been a lot of statements lately. So it'll be interesting to see. So that's the thing, because it does seem like there's it just doesn't seem like without that, that's what's going to be doing it. Tesla Energy should be strong, but it seems like still that without self-driving, that revenue and sales and earnings will continue to fall despite the official estimates out there. Analysts like to take Tesla analyst estimates and just cut them as the year goes on. But so we'll have to see.
No, autonomous, such a big part of that growth story, Ed. And we're on the daily chart here. And as you mentioned, we have that news as of January 22nd. This giving a nice boost to Tesla stock, putting it just above the 50 and 21-day moving averages here. If we look on a weekly chart, it looks maybe like a failed breakout here out of a cup base with a 474 buy point. It was in that buy zone. It fell below the 10-week moving average at, and it looks like that's the area now where it's trying to find support. So again, uh, what are you looking at Tesla to set up here with earnings just a week ahead?
Yeah, I mean, I think, look, I can imagine that like investor on this particular day peaking above. I'd like to see more of a decisive break of the 50-day line going on the daily. I mean, it's peaking above, and maybe just a little more where you're obviously, just a little bit more, but it's above the 50 and 21-day line. I can see why somebody would do that. There probably would be another base that is working here. It's just a question of that. But heading into earnings, yes, I said it might be boring, but you don't know. You don't know. I mean, uh, so how that will go. And there's the potential for huge gains, huge losses. I mean, there's definitely been huge post. So, uh, but other than that, so I would see setting up. And so, yeah, it seems like a new base might be setting up on that front. The stock can go on huge moves and it can go on huge declines. Last few months have been sort of sideways, uh, but and because so much is on vibes and expectations, it's almost just like mood swings. It's like if somebody is in a bad mood, the same situation makes them explode, and then on another day they're a happy mood, and the same situation it goes up. So it just that can sometimes be how Tesla stock operates. It's like nothing has changed, and yet the stock will go up or down just because of a vibes feel out there. That makes it tougher. But technically, it's showing something interesting. But earnings are coming up.
And what about the fundamental picture? Because again, another one that has pretty mediocre EPS composite and accumulation distribution ratings with Tesla. But again, I think so many investors believe in this story and have that conviction. It really is that full self-driving growth that will be generating that future valuation here with Tesla. So anything with fundamentals jumping out to you?
The fundamentals are lousy. I mean, and and yeah, the estimates are higher, but I don't, I don't see them. I'll be honest. I don't see them as very credible unless they're self-driving. If they're self-driving, then sales will surge. Presumably, the pricing will improve. So that's it. But so it really comes down to that. So it's fine if you believe that that's going to happen. Then that's going to. But the fundamentals are not good. And that's unusual. It's one thing, oh, people talk about, oh, there's this long base. Oh, da, 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 isn't that great? It's like, but the long base is usually when the earnings are picking up and it's like this, the valuations get better and the story is so much. And it's like, but that earnings line just keeps on falling, falling, falling. And there are no EV models other than the Cybercab, which it needs self-driving. It needs self-driving. So again, it's all self-driving. There's just nothing else to be said about it. If that comes in, everything works out well for the company. If it doesn't, it's going to be another lousy year coming up.
All right. Well, self-driving. If we didn't get the memo ready, paying
Yeah.
attention to that. All right. Well, those were the big names on our radar, Ed. But there's a lot more to go through. There's a lot of mega caps reporting next week. Let's start with Apple, scheduled for earnings on January 29th. And again, another one here that's really pulled back over the last couple months, trading well below the key moving averages, Ed. So, talk to me about what's been going on with Apple and what are we potentially looking for here on this earnings call?
Yeah, I'd like to hear stuff about AI. They're doing some stuff with Siri, and that's going. Google Gemini is going to be part of that. I'll be honest, this move that it made up was just like it was so strong when like the numbers are just okay. Okay. It's not, it's just, and it's and now it's sold off. And I don't think much has changed on the fundamentals. It's just sort of like, oh yeah, wait a second. And so this needs to get back above the 50-day line because this is a pretty bad break of that area and needs to set up again. But yeah, I think we need to see that maybe teasing things, and it could be stuff that comes down the road. It doesn't have to be like, it's not so much the fundamentals or in the short run. I think people want to hear what are they going to do that's really going to be a game changer, that really to boost growth, going forward.
Yeah. And how about Microsoft? That company reporting on January 28th. Another one here that's been a little bit of a downtrend, trading below the key moving averages. Pretty paltry RS rating here of 24. Um, so again, it seems like maybe being hit with concerns about like all this AI spending and if that's going to be paying off. So what do you see with Microsoft?
Yeah, I think that's the thing. Is it paying off? I think there's concern about that, and not just that, just that in general, software is it, is that going to just in general be just sort of taken up by AI? I think software has been doing terribly, just in general. IGV, of which Microsoft is one of the biggest members. It may be the biggest member now, given what some other ones have fallen. But software in general just looks absolutely terrible. And I think it's, whether it's going to be true out that way or not, but concerns I think about that AI will take over. Microsoft, this has just been struggling for quite a while. The relative strength line has been weak for a while. The stock has sold off for months. It just keeps on breaking things. It has a lot of repair work to do. Honestly, we care more about this because of what it says about CapEx. How much is it going to spend on AI? And how much is Azure and the cloud computing, which is AI, a lot of AI involved. How well is that doing?
Right. And I mean, also talking about that CapEx, we have Meta due next week on January 28th. Another one that's been struggling, Ed, recently moved above the 50 and 21 day lines, but still needs to clear that 200-day moving average. So, again, another mega cap here that's been struggling, I think, under the weight of some of these AI spending questions.
Yeah, I think that people it's like they're spending a ton, and it's a question of how much can they actually get. Uh, how much can they actually generate from it? Whereas I think people feel like, okay, Google can make money off of it. Well, where's the payoff for Meta? It just seems to be less than that. So, yeah, will there be a point where they say, we're going to cut back or slow down? Anything to see that the revenue growth has been strong. The EPS growth slowed a little bit the last quarter, but there's some strong numbers here. It's supposed to be pretty solid earnings growth. But I think just people are concerned about how much they're spending and how that will actually translate. Obviously, that's a concern for a lot of these hyperscalers.
Yeah, and staying within the theme, let's take a look at Lam Research. This is a semiconductor name. This one looking pretty extended, Ed, but it's had a very nice run here over the last few months. So, what's going on with Lam Research? And looks like maybe this one needs to set up again before investors can catch it.
Yeah, it does. And chip equipment has been one of the hottest fields. You can see that group 6 out of 197. That's pretty impressive. Yeah, and this has been extended for a while. These are also benefiting from the memory theme. A lot of these chip equipment makers, and we had Taiwan Semi come out, just a chips giant, saying we're going to spend a gargantuan amount of money on chip equipment. So everything seems to be, whatever it is, chip equipment is now really getting that benefit. And so while, so a lot of strong growth is expected for Lam Research and others like ASML.
Yeah, ASML, let's take a look because that company also reporting earnings next week on January 28th. Another one that is looking a little extended here, Ed. It tested the 10-week line uh, back here in mid-December. But again, this space doing quite well as that spending continues to ramp up.
Yeah, so that is, again, we're going to be looking for guidance. We're going to be looking for that. It's not with a lot of these tech names, these chip names, so that we're looked at and some more that we'll look at. Obviously, what the hyperscalers say this coming week and the week after that will be huge because they could come out with good numbers. But if Microsoft says we're not spending any money on AI anymore, we're going to see some problems and everything in the AI space. Obviously, they're not going to say that, but you can get the meaning. So it's not just these earnings reports; they're coming in just such massive things about AI in general.
All right, and let's take a look at some data storage plays because that group has been doing well. Looking at Seagate Technology, that's ticker STX. They're reporting on January 27th. And another one here, trading above a buy zone after this strong breakout here on January 6th, above a 308.93 buy point here, kind of an ascending base on market search pattern rec. And but again, another area that's been doing very well. So, how can investors uh, look at this and potentially watch it set up so they can get actionable with it?
Yeah, this needs to set up again. I mean, it just needs to set up, and this is the closest to being in range. It was in range just a week or two ago, or even a few days ago, and technically. Need to see that. Obviously, there's just been a sea change because memory, everybody realizes memory is so important. And memory, which usually goes on boom bust cycles, is now seen as something that will last for years because AI is going to have this long tail demand for memory. Uh, so the thinking is that that also means that they can have higher valuation because the memory stocks traditionally had relatively low valuations because it would just end. The good news would go away. It would oversupply would hit, and then they'd slash prices by 50%, and it would all go into boom bust. Because look at that. They had look at the earnings. And this is the same on all the ones that we're going to look at today. In 2021, this had earnings of 564. The next year at 818. And then the following year, 19 cents. I mean, that is a huge drop. And it's like, but this time is different, as we say. We'll see, but that's a big reason. So it's not just that their earnings are great; it's just that they're supposed to stay great, which also means that it can get a higher valuation on them. So it sort of compiles upon itself, and that's why we've seen these enormous gains. And STX is just one of them.
Yeah, and I mean, look, the computer data storage group, number one out of 197 of the industry groups IBD follows. Let's take a look at Western Digital, another play in this area, Ed. Another one that's been doing really well, another one that is extended here. So, yeah, talk to me about this chart. And again, looks like another one that we'll just have to wait for it to set up.
Yeah, maybe right at the beginning of the year, there was something you could have done when it's sort of just, went above that little area. Yeah. But since then, I don't think there's anything you could have done. And now you just have to wait.
All right. Well, we'll keep waiting. While we're doing that, let's look at some defense names reporting
Oh,
next
also in
week.
SanDisk. SanDisk is reporting next week, I believe. And that's another
Oh,
one in this space. And that
Sandus.
one, again, same deal, SNDK. And that one is also to the moon. This one has been the hottest ones. This was probably the hottest stock in the S&P 500 last year. it exploded out of a base early to start the year. It's basically doubled since breaking out, just about, 2 weeks ago. But, obviously nothing that anybody could do.
Yeah, I mean, it basically almost went vertical here. So, yeah, SanDisk reporting on January 29th, another one that needs to set up here. And as we mentioned, we've got defense names, RTX due on January 27th. This is another name that's moved recently. We've had a lot of geopolitical news, particularly around Trump wanting to boost defense spending. So, RTX getting some positive movement out of that, out of a buy zone though, Ed. So again, another one here potentially would have to wait and see.
Have to wait and see. A lot of cross currents and stuff, but it's had a strong move on. The growth has only been okay, but they make jet engines too, so that may be something to see. In addition to defense, this one has a lot of commercial as well. Then a little bit of pickup there in the last couple of quarters. Are we going to see some sustained double digit growth? Or even better, or is it going to slow down again as it's projected to next year?
And what about Lockheed Martin? That's ticker LMT. Another one here, building, looks like it's building the right side of this really long cut base. I'll switch to the weekly so we can get a better picture here. But another one seems like, again, so long that it's probably not a valid base anymore, but probably could have entered early when it bounced off the 10-week line. But another one that's had a nice move here over the last month or so.
Yeah, and they're supposed to be stronger. This one also has lumpy earnings, and this one's have there's going to be lumpy earnings, but you can see uh, bad year in terms of like profit, but it's supposed to finish strong, and then it's supposed to have a big, solid gain next year, pretty strong gain for Lockheed. So yeah, it'll be interesting to see there. It'd be nice if this could pause for a while, and then maybe use that giant thing. But I agree with you where the entry probably was best several weeks ago.
All right. Well, we also have a number of oil and gas sector names reporting next week. That industry has been in the spotlight recently with events in Venezuela. Ed, but let's start with Valero Energy, that due on January 29th. And another one here jumped above the 50 and 21 day lines with this gap up here on January 5th. Looks like it's, trying to digest those gains, Ed. But again, what would you see here as a potential setup for Valero?
Yeah, it is in a buy zone. It's just sort of, but above 185.62. Obviously, there's been back and forth with the whole Venezuela news and because they benefit from refineries on the Gulf. So they're one of the so Venezuela oil. That oil is really suited for those refineries traditionally. But it's been also back and forth, so it makes it a little tricky to buy it. Good chance if you bought it anywhere along the last couple of weeks, except right at that gap, you were probably down at least at some point for some period of time. uh, but we just have to see how that comes out. This is one where the earnings are supposed to be continue to be positive for a while.
And how about ExxonMobil earnings there on January 30th? Another one here that's had a nice move out of the buy zone here on December 29th. It's extended from that buy zone and from the moving averages.
Yeah, this is interesting how they're doing. Oil prices being sort of down aren't great. Natural gas prices have spiked, but that's really just the last few days, and that's after not having a great start. So I don't want to. That isn't what's driving the move in the last few months, few weeks overall. I mean, I don't know about the last couple of days, but it'll be interesting how much more it can go. I mean, it's not. We're not talking about great numbers here. The earnings have fallen for 3 years. It's supposed to be flat next year. The stock hasn't really gone anywhere. I mean, now it's sort of moving out of all that, but can it move out? And I'd say the same thing with CVX. CVX sale earnings are supposed to fall again next year. That's a lot of, I mean, that's a pretty big decline there. It's important to see what they have to say, what they do for capex or drilling at things. This does not seem to be the place where you'd want to be in the energy space, but they're still just absolutely enormous and important for things.
Yeah, and how about we jump on over to Celestica, earnings for the electronics manufacturer on January 28th. This one in consolidation, 363.40, the traditional buy point there. It's trading below these conjoined moving averages here around the 50 and 21 day line at looks like it's maybe trying to hold at that 300 level. But what are you looking at here?
Yeah, I mean, there was some negative news. I don't know if it was confirmed, and so that really hit the stock on this particular day. We'll see how that goes. If it, the problem is this has some pretty volatile moves, and so this is definitely when you don't want to touch ahead earnings with semiconductor. But you can see just in this base a lot of volatile action. Some of it on the upside, but a lot of it on the downside, and you just don't know how that will go. I think if it gets above the highs from the sort of the 2026 high, yeah, right there, that would seem to be a spot. Like if it can break out past that on earnings or following earnings, that could be a place to get into it. But again, there's been a lot of skyscrapers that are pink here. It hasn't been a great run of things, which suggests some concern. And there have been a lot of other AI hardware plays, some of which were getting hit on this particular day, but a lot of them were already moving out and extended. And why is this one lagging? Again, maybe it's like they come out with a great report, their guidance is great. It's like this isn't going to be a laggard anymore, and that could certainly be the case. But there are just some technical concerns about it heading into it, but definitely one to be watching.
All right, so we'll be watching that 333 level here, potential entry point with earnings if this makes a move. How about we take a look at Amphenol? That's ticker APH, another one with earnings, Ed. Looks like it's reversing just probably right at the top of this buy zone here from a double bottom base with a 143.48 buy point.
Also, one that's had some volatility, but it's bounced back and looks stronger. It's always a downside reversal is a lot nicer when you're already out of a base. I mean, because it's not, it's chances are most people are still up on the stock. Yeah, maybe this provides an entry like a little add-on place, or maybe it dips down and there can be something out there. This has so many quarters of accelerating earnings, and the revenue growth was accelerating for several quarters until this last quarter. Tons of growth. Presumably, that those growth rates will slow. Next year the comparisons are just getting increasingly difficult. But big AI, AI winner right now. So definitely want to watch.
All right. How about we switch it up with Caterpillar earnings there on January 29th? And looks like maybe this one cleared an area here around the 627 level, Ed. But thoughts here?
Yeah, maybe the best time in hindsight would have been like on January 2nd or whatever that first day. We've seen a lot of those stocks. There was a strong start. So when it came out, this is another AI data play. There's some things that they sell for AI, and then obviously construction involved. So that's why this stock has moved up so much. The stock has more than doubled since the April lows, in part on expectations of better growth ahead. And the earnings have not been good. The sales finally picked up, but the earnings are supposed to pick up next year. So definitely want to see that. And this will be important for a lot of other things, even though this is for heavy construction and some other things. It'll be, again, there's a lot of names in there, but this will be oddly, an AI bellwether of all things now.
Yeah, everything's AI now. How about we look at IBM earnings there due on January 28th? Another one here in a flat base, 324.90, your pivot point, but trading below your key moving averages here.
Yeah, I made a nice move on earnings, and it's sort of gone sideways since then, and sort of trading next to the top of that prior base. I think if it got above the 2026 highs, on earnings, again, like something, yeah, right in there, in there, or again a little higher than that, the 315, those would be places you could enter. I mean, there might be something else out there, but we'll see how earnings are. Revenue growth has accelerated. Earnings growth has picked up a little bit. Can they really pick up even more? That would be the thing, or sustain some kind of solid pace going forward.
All right, so we'll be looking at around the 313, 315 level for IBM there. And let's wrap it up with ServiceNow, Ed, earnings there on January 28th. This one in a downtrend, trading below all the key moving averages. But why is it important to pay attention to ServiceNow?
This is the first pure play software maker, and it has some AI exposure. Supposedly, it was supposed to be on the positive side, but this has been doing terribly. And so, yeah, there's Microsoft, but a lot of it is the stuff is not. We don't care about the software side of their business per se. So we want to see. I mean, software looks terrible. If we're going to see any positive signs, service, we want to see it now from now, and just something there. And if we can't, well, it can, it might just another be a reason to stay away. because this has really struggled over the past several months, especially in the past couple of months, along with the sector. But this is a no-go. This needs a ton of work, needs to get above the 50-day, the 200-day line to even like start getting interested. I'm not even saying it would be actionable there, but needs to get above those levels before you get any kind of interest in it. And you can see the high volume losses day after day. The losses haven't always been huge, but it's just been on and on. Just really, really poor action. So, and a lot of software names look like that right now.
All right, Ed. Well, thank you so much for your insights today. We really appreciate it.
Thank you, Alexis.
All right. Well, that wraps it up for this edition of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today. That goes live after the closing bell. And we'll be same bat time, same bat channel next week for Earnings Cheat Sheet. So we'll see you all then.